1212, this is the Alpha FX. Leave a comment in the chat if you can hear me. 1212, this is the Alpha FX. 1 million, 2 million, 3 million.
is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, 1 2. Hello, hello, 1 2 1 2.
Good evening.
How is everyone?
Very well. Thank you.
Very good. Thank you so much. So let's have a look. Quickly just going to check on the setups. Okay. Let's have a look on the MetaTrader positions. Okay, so the second position, good stop depth and break even. But the first one is still running nice and strong. What positions do you guys have open?
Took the profits on the first one. The second one is still running.
In drawdown?
Yes.
Okay.
I have a wider stop loss.
Yeah. Let's have a look. So we had an impulse move on gold. And now it's retracing back. So we had this nice little wedgie. And what I'm looking for is obviously, well, the wedge was broken. Let me just adjust it. I'm looking for retracement entries to continue the short downwards. Okay, it doesn't really show anything, the fibs. So let's just wait, but this area right here needs to be filled up. What it looks like gold is doing right now is filling up the imbalance that's created with this impulse move. So either the bottom of the this red bracket is going to be the resistance, or maybe it's going to tap in a little bit higher. So let's just wait for now until we have a clear setup, clear entry for short, continuing short position. Let's have a look what we have in the economic calendar today. Oh, Pikachu says I look like a demo trader. Well, check this out, buddy. And also, I don't think that demo traders have Bloomberg access. I need to scan the QR code. And now logging into my Bloomberg terminal. Let's give it some time until it sets up. Until that, checking the economic calendar.
Hello, hello.
Hey Ali. Wagwan.
Wow. That's a trademark for Marwan.
Sorry?
Marwan has the copyrights for that one.
Okay, so we're going to have initial jobless claims and continuing jobless claims in the United States. Not sure how is this going to affect the market just the day before NFP. I want to hear your opinion first, guys, before I make any comment or forecast. Because you know exactly that I've been away for a few days last week. and I have to make sure that you guys are prepared. You're doing the same thing. Consistency is key, and you have to be ready for these kind of events. So I want to hear some ideas. What do you think? How is the initial and continuing jobless claims is going to be printed? What will be the number, and how it will affect the markets?
Awkward silence.
Hi everyone.
Hi. Still there, Thomas?
I am still here, waiting for your...
Well, the trivial answer is more claims means that more people lost their jobs, and they need help from the government, and this is a bad indication on the this could be that leading to showing that the recession is reaching some levels that maybe the Fed wants to go there. And on the other hand, less claims means that more job opportunities have been there. And in that case, I'm not sure if that can be read as an improvement in the US economy or something else. I'm not quite sure, to be honest with you.
Mm-hmm. Okay, so can you just repeat the first one? That was the initial claims, wasn't it?
Well, I said if the claims are less than before, this means that more jobs have been created, and that's why less people claimed money from the government.
Unemployment benefit, yeah.
Exactly. Yeah.
So that means that the economy or the labor market is continuing to be bullish and strong, and the economy is overheating.
Right.
Mm-hmm. And if there's less continuing jobless claims, or it's going to decrease, that's the further, as you said, it's going to be more people entering back into the job market from unemployment.
Yep.
Okay, initial jobless claims. Let's have a quick look.
And that should have some direct, like, or not direct maybe, or one of the indicators of recession based on how many jobs, like jobless claims and jobs are related in a way or another.
Mm-hmm.
So an economy going into recession should lose some jobs or more jobs, theoretically speaking.
Oh, Augustine on YouTube says that initial jobless claims don't move gold. In effect, this is correct and incorrect, because it's not the actual initial jobless claims and jobless claims that's moving. That's not the number, but the meaning behind how strong is the labor market. Because guess what? The Fed or any central bank in the world, they have a job to monitor the labor market, which is actually, if you go to any of the central bank websites, they have a dual mandate, which is financial stability, transparency, meaning that inflation should be at 2% rate, and also full employment. So maybe check your facts first before you comment this, that it doesn't move the market, because it's the monetary policy that moves the market. So if you go to the Fed, where is it? Monetary policy. Somewhere here, but anyway, they talk about the dual mandate, which one of the lags of the dual mandate is the labor market, so they have to make sure that there is full employment. The question is, if you look at the labor market, which is continue to be strong, which is bad for anything that the Fed is trying to do, which is fighting inflation, because a tight labor market or strong labor market is have inflationary pressure. Ali says at the end of they can't keep up the rates for much. Well, in the long term, yes, I agree with that. But also the Fed don't care about that, you know, if the economy is going into recession, the Fed doesn't care about developing countries getting financial issues because of the strong US dollar. The Fed doesn't care about anything. The Fed has a job to do which keep inflation at 2% or close to 2% and have a labor market which is close to full employment. But which one is more important for the Fed, full employment or inflation at 2%? If you look, they already have employment at full speed, which means tight labor market. But if you look at the inflation, it's 4 times the Fed target rate. So priorities have been set and also announced by the central bank that they're going to fight inflation. Jay Powell publicly said that they don't care about the labor market now because it's the inflation that's #1 priority. So in my opinion, that initial jobless claims, and thank you, Ali, for the comment, the only comment. The Fed won't care about the labor market. So initial jobless claims, if it's in line with expectation or higher than, so it's better than expected, meaning that the initial jobless claims is lower than expected, it's lower than 203, or even the previous one is 193,000. In my opinion, that's going to be a bullish sign, a hawkish sign for the Fed, bearish for gold and stocks. But we will see, because currently there's two very different market sentiment is fighting on the market. The first one is the market is pricing in that the Fed increased interest rate too much, and some people in the market say that the Fed needs to slow down, such as the other Ali said in the YouTube chat. But the question is that are they really going to slow down with rate hikes? I don't think so. And the other market participants, they advocates of higher interest rate, meaning that the market, they are super bearish on gold and stocks, because when the real yields, or the real yields, which is the nominal rates minus inflation, giving you a net positive return on your investment, if that's in a positive territory, that's already a problem for gold, and it, with the further increase of interest rates, is going to continue escalate and be much stronger than before. So looking at the yields right now on a 10-year treasury yields, now it's keep continuing higher and higher. If you look at the Fed dot plot, we talked about it yesterday, but you know, repetition is always good. If you look at the Fed dot plot, which was released in 21st of September, so 3 months, actually June, July, August, September, 4 months after the June one, you can see that the Fed dot plot is still very hawkish. So in 2022, all the FOMC voting members are advocates of, you know, interest rate at just below 4.5%. The current interest rate is standing at 3.25. Where is it? There you go. That's the one. That's the correct one. 3.25. And if you look at the expectations of the Federal Reserve central bankers, it's below 4.5. So 4.5 minus 3.25 is still 100 basis point differential. So interest rates should go up in 2022 Q4. And in 2023, they even forecast something below 5% interest rate. So it's not a 100 basis point to the target at the end of Q4 2022. So from this perspective, we can be sure that gold is going to go much, much lower than that. Now, the problem with this is that the market currently knows, and participants know exactly, that the Fed won't have another interest rate decision until November. So we still have 4 weeks to go. And question is, are they going to use this time to pump up the market before the big drop? We will see. Ali Mohanganan says, but they care about the jobs. With people losing jobs in a few months, they have to slow down. No, they don't care about it. Unfortunately, Jay Powell was really clear about it. And if you follow, you know, monetary policy and everything that they say, which, quick question to you guys, do we follow monetary policy day to day? Do I comment every day in the morning briefing?
Yes, of course.
There you go. Thank you. So we follow monetary policy. We follow every single statement which comes out from the Fed, and we know exactly that Jay Powell was super clear about that they don't care about the labor market. He said, he admitted that they're willing to sacrifice a short-term recession just to avoid a longer-term stagflation. So that's the stance of the Fed. So currently, I have only the short positions from this morning. Closed of them, most of them down in very nice profit. And US 30, and I'm thinking to close down this position because, you know, the market could pump higher. And actually, I'm going to lock in the US 30 position now. Do you guys have any open position in US 30?
Not anymore.
Yeah, I'm closing it down because yesterday was a bit tricky. So profit is profit. And I'm waiting for gold. And I'm going to slowly reduce the position again. Just going to show you what is Daddy doing. So I'm going to close down 50% of every position. Now we'll be looking for new entries as we go into the New York session. Okay, and pretty much that's it. Only 3 positions on gold.
Yeah.
And going back to...
Sorry,
Yeah?
on Bloomberg TV, they're saying that the ECB initially prefers a half a point rate hike on the next meeting in November. So,
yeah, they have to raise. I mean, they are behind the curve.
Yeah.
If you look at the EU interest rate, which is that's the European interest rate, 1.25%. That sounds quite small relative to the US interest rate. So they have to, if they want to fight inflation, because that's one of the tools that they can use, they have to raise interest rate for sure. And how did the European narrative change by Christine Lagarde in the past, since the beginning of the year? Do you know that?
They try to change, but I think the effort are not the best. Or
ECB
like
was much more
wished.
cautious with comments. They didn't want to raise interest rate just when the Fed started the rate hikes. They were more cautious because the European economy is more fragmented than the US, and this was one of the key words which was used by Christine Lagarde so many times. Okay, we started to see some rejection on gold. Question is, yep, I'm going to be looking for short entries when it reaches the sell zone, and we have 7 minutes until the initial jobless claims.
Is it a bit quiet today?
Yeah, super quiet. Nobody wants to talk.
You muted everybody.
Of course, because, I don't want to hear anyone flushing the toilet when they go out. Oh, that's really ugly on YouTube. There's 76 likes. Wow. Wow, that's super ugly.
See, you keep complaining and you've got 86 likes.
Yeah, it's unbelievable. These guys are... Whew. I think they want to end the stream earlier. $91 likes. It's gone up now. 110 likes. I don't think they're going to reach 200. It's impossible for these guys. They're not too serious about it. And we have 5 minutes until the continuing jobless claims and initial jobless claims. Let's have a look at the yields. Now I'm still struggling. I know Samir recommended a software to try out to fix my Bloomberg issue, which I didn't have time today, but I will definitely try because this browsing, or I need it on the monitor to be honest, because this 49-inch is not enough, unfortunately. Okay. And we have 4 minutes until the initial jobless claims. 78% of people on YouTube says that gold will dump today. And I will be entering into small sell just before the news because I already started to see some rejection. So what I'm doing is I'm just going to use a small stop loss, leaving small position stop loss at 1720. So I just entered into sell and looking for some more bearish signs. Once again, we don't know what the number will be, so this is only a speculation that we're going to see a stronger than expected labor market, which will have a bearish effect on gold, because what speculators, investors are going to bet on further rate hikes or not. This is only a speculative game. Only approach with caution. This is not financial advice. Tra la 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 la.
But we will double your money.
You can double your money, my friend. Get your wife's wallet.
How you doing?
Not bad, not bad. And I'm going to add US 30 to the game. US 30 hasn't been too nice to me recently, but we're going to see some more selling opportunities. Okay, gold is nicely dropping. So far, who entered into the gold sell?
Moi. I took some profit on this morning's sell when I was on my break, and I just entered another sell.
Very nice. Very nice, my friend.
Considering S&P 500, I'm not too sure yet.
I'm more cautious with US stocks because of the bear market rally.
Yeah.
And we have 1 minute 30 seconds until the data release, ladies and gentlemen.
Hey, tamam.
Hey. We have 1 minute until the data release. The other thing which will be interesting I talk about after the data release and when the dust settled is going to be the central bank speeches tonight, which every member knows exactly what to expect from the central bank speech tonight. Now in US 30 I will delete this because I was looking for shorts during the power hour just before market close.
Yeah, yesterday power hour, that was amazing. I was just watching, I couldn't jump in.
Oh, what happened?
Looking
Yeah, that was
forward to
sick.
today's one. I'll be ready to engage.
And we have 10 seconds until the data release. 7, 6, 5, 4, 3, 2, and 1. Voila, the data is out. Price is pushing up a little bit into the sell zone. Let's see, what was the number? Shout out the number. Oh, that's really ugly. Initial jobless claims have gone up, so the economy is definitely having some stress. More people claiming unemployment benefit. That's not what I was expecting. Let's see how the market is going to react. Is it going to signal to the market participants that the Fed needs to slow down with the rate hikes, or is the market already priced in that the Fed doesn't care about, you know, the rate hikes? Don't jump into anything just yet. Let's see how the market is going to react. Tapped into the sell zone. Any comments and expectations on gold, ladies? You guys are really quiet today.
I'm not trading any US there, that's why I'm not giving any comments. Either.
You can have a view.
Yeah, but if I had a, if I was like, you know, more likely to any direction, I would have took the trade myself. So. I posted a couple of charts today, including the USD light forex index, and it is at the trend line now.
Mm-hmm.
That's a critical zone. So if it respects that trend line, then we're going to be still continuing for bullish momentum, euro, pound, and maybe also on gold. If it breaks, then we're back into the USD bull market. And as we speak, the USD index is dropping.
It's your mic is really quiet, Ali.
I said, as we speak, the USD index is dropping.
That's not good.
Yep.
I mean, the DXY is dropping. That's not too good.
I used the USD light forex index. That's different.
Mm-hmm.
A little bit different here. My only trade is Euro Aussie, as you know. Since yesterday, I'm in this trade, and this is in $1 pair, so nothing to comment about.
I used to trade Kiwi dollar and Aussie dollar pairs, but that was like years ago.
2 days before, all my trades were on dollar pairs. I was shorting Euro, Pound, and US 30. But now I have no setup, so the only setup that I found was Euro Aussie. That's why I took it. 2 days before.
Okay, Interesting that the labor market data was actually way higher than what I was expecting. And it looks like that the market has started to realize that the Fed won't care about the labor market. They don't care about unemployment going up because the labor market is tight enough to survive, for example, a 1 or 2% increase in unemployment. So the sell zone was working so far, for now. But you know, anything is possible, so make sure that using a stop loss, using right position sizes. Even though this is not financial advice, I can still say these things, because the only thing that you can control in the market is your position size and the stop loss. Nothing else. You have no power over anything else in the market. Absolutely nothing. Actually, US dollar is quite strong if I look at the FX dashboard against the peripheral currencies. And there's nothing else. There's no other news. Only the gas. Yeah, I think the market is now waiting for the Fed speeches. As I mentioned before and during the morning briefing, that we have 3 central bank speeches from the US tonight. Conveniently, is just around the US market close, or before, and one of them is after. Waller is actually heavyweight, along with Evans. So the heavyweight is placed after the market hours, so they don't want to crash the market too much, which means and signals to me that the Fed is again coordinating a orchestrated attack against inflation, which is going to be a really hawkish speech, but they don't want to spook the markets too much, hence they put one of the heavyweights after the market close. Simple as that. Position is so far running in a modest profit. Sell zone was working absolutely beautifully, perfectly. Who entered into the sell?
I did.
I did.
I did. I had positions from earlier, from like 1726, I think, but I entered another one.
But
around
1726, that's a sniper entry, mate.
Yeah, that was the wick up from the other day, before the drop.
Okay, so the morning coffee is already covered with the profits that we booked in from the morning position. Let's have a look quickly what's happening on US 30. Is US 30 going to lose some steam, or is it going to continue higher until we have some official communication from central banks? And most of my positions are in not break even, but in more than break even, in profit. I'm going to keep CFIT today, not risking much before NFB. It was a quite muted reaction today, which, you know, some people expected because of the NFB tomorrow. I'm more interested in the central bank speeches later tonight. Let's quickly have a look on the yields, because we need to follow the yields. Yields dropped a little bit on the US 10-year. Let's have a look on it's going to be a muted market tonight, or today.
Gold is not following pound and euro.
Gold is gold. What's happening on the euro market?
Pound and euro shooting up. Not that much, but
yeah, gold is definitely so far on its own way, on route. Dollar is weakening, which should be a bit bullish for gold, but so far it's not that interested. Euro sterling falling, GBP USD strengthening. Okay, so by looking at the yields, we may have a nice support at this price level, percentage level, something like this, and I'm expecting yields to go way higher. And I know, you know, we shouldn't really put technicals on yields, but this looks like an inverted head and shoulder, which if yields to continue higher, which they will, then gold is definitely destined to go much lower. And people on YouTube, I don't think that you really appreciate the stream that I'm doing. It's only 170 likes so far, so we have two options. It's either I'm going to end the stream, or we push up the number of likes to 250, 300. It's your decision. What do you want? Do you want to keep the stream going? Do you want the night juice setups? Okay, finally gold started to move. Quick look on the first. Actually, Bloomberg has a good function, which is the first word. This is one of the fastest news kind of function in the Bloomberg terminal, but it's filled with so much shit as well, so you have to really filter down what kind of news you want. Initial jobless claims surprise modestly to the upside, printing 219 versus an expected 24. Continuing claims were pretty close to expected 1 point. Where is it gone? 1.3 million. This is the first upside missing claim since the end of July, so the market is reacting a bit more than it probably should on the basis of single, usually noisy number. Needless to say, the current threshold of claims is still consistent with the really tight labor market. So I guess Bloomberg is on the same page as I am. It's a bit suspicious. Gold is really not finding its way. So I think we're going to have the same kind of shitty market today, such as we did yesterday. We're going to be struggling for, you know, some pips. So So I'm going to close down the lower position. I'll leave it. I should be fine with that. Are you guys still awake? There's 95 people in the Zoom and no one is talking.
Rain, rain, go away. At least somebody should be singing. Oh my.
Until Ali Mogadam says, until unemployment prints above 5, the XY should be going up. Not sure how you made this conclusion. And we have 45 minutes until the New York Open. So
hello, Thomas. I have a question.
hey, Kenta. Wow, I never heard you speaking on the stream, on the live.
Normally, I watch you on YouTube.
How you doing, mate?
Question. On the tomorrow for the report, there are two different USD categories. One is for average hourly earnings. Well, it's three. One's for average hourly earnings. One is for non-farm employment change, and the third is
hey, Kenta.
Yeah.
I never heard you speaking on the stream, live. Can you just no, can you just I don't know who's there's an echo in the background.
There are two different.
Someone needs to mute YouTube.
One is for average hourly earnings. Well, it's three. I'm sorry, I just closed my YouTube. I think the echo was coming in.
Yeah, that's okay. So yes, we have average hourly earnings.
Yeah, I wanted to know which one of those is most important if they come in different. Did that make sense? Like if one of them comes in below and then the other two comes in over, which one takes priority?
Well, what do you think? What do you think? First of all, let's break it down.
The unemployment rate, but I'm asking you because you have more experience.
Well, it you know, the market will decide which one is more important. So I can only comment that what traders are usually looking at. But to be honest, like if you look left on the chart, there are stars 1 to 3. I know it's simplistic, but actually it does help about to filter which one is said to be more important. But all of them are important if you're talking about labor market and earnings. But can you describe what's the difference between the average hourly earnings, MOM, average hourly earnings, YOY? and then we can move on to the next one.
Year on year, month on month?
I was looking to counter test, but thank you so much for the answer.
I'm just guessing.
No, I cannot. I cannot tell the difference. I don't know the difference between them. That's one of the reasons I was asking.
Okay, so one of them is month on month, so measuring September to August. The other one is year on year, measuring it to the current or today to a year ago. But the question is that, you know, last year we didn't have inflation, so average hourly earnings probably are going to be much higher compared to last year, because we have almost 10% inflation, which means that all the employers have to give some kind of benefits to the employees, higher wages to attract talent, employees to work, and also to combat inflation, because if your employer doesn't give you an inflation following wage increase, then you should change job, because that sucks, because your money won't worth the same tomorrow as today, because inflation is going up. So average hourly earnings, definitely it's important. And then what was the other one? Unemployment rate, right?
The unemployment rate and the non-farm employment rate. Well, non-farm employment change.
Non-farm employment change.
I'm sorry, I look at FOREX Factory.
Mm-hmm.
And that's what I'm looking at. I think you look at Bloomberg. No,
I'm using, to be honest, like investing.com. So Bloomberg, it's not different. You see the same kind of data. If I look at the economic calendar, it's exactly the same. Maybe the data is printed here 5 seconds faster than any other platform, but doesn't make a big difference. So the number is the same, whether it's in Bloomberg, whether it's investing.com or Forex Factory. So to be honest, like Bloomberg doesn't give that much added value to spot traders, as when I was a fixed income trader. But focusing on your question, you know, the non-farm payrolls, you can read the description that it measures the change in the number of people employed during the previous month, excluding the farming industry. So it's actually focusing on the service sectors, you know, and not just service, but anything outside the farming industry. And it's the how many people have been employed. But you know, this is only one piece of the puzzle, so you need to focus on unemployment as well, because, you know, if unemployment, if the non-farm payroll is increasing, but also unemployment increasing, what does it tell us?
I'm sorry, repeat the question.
Okay, so you have to focus on every single of the economic data that comes out, because they give you a full picture, and if you're focusing on just one, you're taking out it from context, it may give you the wrong impression about the US economy, the US labor market. Hence you have to focus on every one of them. You cannot just pick one. And this is why when we have a ton of data printed, we always look at, okay, so non-farm employments, how many people have been employed outside farming. If the number is going up, meaning that there's more people getting employed, but looking at today's data of unemployment, initial claims benefits, so unemployment claims have gone up, meaning that tomorrow the unemployment rate should increase, right? In theory, because if we have more people claimed unemployment benefits in today's data, then the unemployment rate should naturally go up, right? So we can expect unemployment rate tomorrow to go up. And if you look at the non-farm payrolls, then it should decrease because we have more people claimed unemployment benefits. So today's number, the initial jobless claims, is actually forecast for tomorrow. And you already see that the economists are expecting a decrease in non-farm payrolls, so less people taking up jobs. Unemployment, they expect to be the same, but I expect to go up slightly. And then if you look at the average hourly earnings, that's going to give us the full picture about how well those people are doing who have been sucked up by the non-farm payrolls. Got it?
Yes. Okay. Thank you. I appreciate it.
You're welcome. Read up what does it mean, and try to put different scenarios together. That will help you to better understand. And going back to gold, is really a muted session today. And because gold didn't drop that much, it has the chance that it will come back up to retest the previous high at 1725, even to 1727, and to go into or even beyond the sell zone. So this, it's not ideal, but this is what we have to work with. I'm still holding the sells. But I think the New York Open is going to definitely move the market, and in my expectation it maybe won't move it to the direction we want at first, and just before the market close.
Can you tell me why you put a bit more emphasis on the New York opening? Because this is the New York stock market and not the US FOREX market that's open at 2:30.
Because it usually there's loads of volume entering into the market, and
more on it affects more 30 and NAS rather than the other one, in my experience. Okay. Just asking.
Yep, I'm just answering. So when the New York Stock Exchange opens, do you know what kind of assets are traded on the New York Stock Exchange?
Stocks.
Stocks, but not just stocks, there are other asset classes as well. And when the New York Exchange is opening, what other kind of businesses are opening with the New York Stock Exchange, who are filling orders for clients?
I'm asking you the question.
Brokerage firms. So when the brokerage firms open, they also, who are registered and approved to trade other financial assets, for example, derivatives, for example, ETFs, and all kind of other asset classes, which are the spot prices are derived, for example, gold, and even the FX, because there are something called FX futures, FX swaps, FX forwards, which not every retail trader can trade, but there are some high net worth individuals who have access to these capital market products. So when the market is opening, these brokerage firms opening, and they start executing the pending orders. They start taking in orders from clients in Bloomberg, in telephone, via email, fax, you name it, and they start executing these orders. US market is one of the highest liquid market in the whole world, without a doubt, without a question. When they start executing the orders, it's going to change the price of every single asset class. Cash equity, FX, gold, commodities. And this is why I'm putting more emphasis on the New York Stock Exchange Open.
Thomas, hi.
Hello.
Hi. Can I comment on this about the stock and Forex thing? So actually, I think that the Forex market, it's like 24 hours or 23 hours. So we don't have like kind of sessions things. But when we talk about London session, New York session, we definitely not talking about just stock market. We're talking about that people now woke up. There is like a working hours now, and more people coming to the Forex market, starting to like trading on Forex pairs. So that's the difference. I'm trying to answer Alan actually. So about so I think 2-3 days ago he posted also comment on Discord about this. So actually when we're talking about like New York session, we talk that more traders coming because now it's like a working hours in New York. So that's I think my input here.
Yeah. And also, just to add, thank you so much, Milad, and absolutely 100% right. The other thing which is something that's relevant for the FX market is the daily fixing. Alan, do you know what's daily fixing? I'm not sure if I can hear it.
I said I don't. That's why I'm asking questions.
No, it's fine. But you know, I don't know what level of knowledge who you are, so that's why I'm asking. So the daily fixing is pretty much, you know, when you go to the bank and when you want to exchange your currency because you're going on holiday, you go to the bank and says, I want to exchange my hard-earned sterling to euros because I want to go to Monaco to play the casino, or France, or whatever, to Germany to eat the bratwurst. And those banks operate in a way that those banks have to tell their branches that what is the daily exchange rate to these currencies. That's the daily fixing. Twice a day, I think it's 5 p.m. European time is one fixing. But by that time, the New York is already open. And these banks are fixing the exchange rate market. And this is why so much volume is coming into the market at that time. That's another reason why, you know, we have more volatility.
Okay, thank you very much for answering.
You're welcome, absolutely.
Gold's really struggling around the daily pivot point, this 1715. Very lazy.
Indeed. If it won't move below 1712 before the New York Open, I'm planning to close down the position. Otherwise, we're going to trapped in, such as yesterday, and now that I mentioned, gold started to move.
So bad, I closed all my gold sales actually. So.
No, there will be another day tomorrow.
Yeah, sure. Just watching the smaller time frame on 5 minutes and 15 minutes, and there's like kind of projection. It was around 1715. Then I decided to close all my sales. But now I see that now it's dropping, and it will at least go to the 1712, which is like support on M30, which is.
Oh yeah, gold is moving.
Yes, and dropping maybe to 17.
Keep talking, keep talking, keep talking.
I don't know what you guys are doing, but keep doing it.
Go.
A news just hit on Bloomberg today on the terminal that UK power blackouts may be unavoidable this winter. It's quite a news, isn't it?
Never in living memory in the UK rolling blackouts. Never.
1960s.
No, that's not true. It was we had some blackouts.
Depends how long you're living, though.
Yeah. Well, I think. Yeah, I'm not sure. Alan wanted to say something, but Alan's mic is really quiet.
Sorry, it's just because I'm using my computer mic, so I have to go closer to it. During the 70s, mid-70s, you know, we had blackouts then, and we actually had a 3-day week at one point to reduce use of energy. So that was all quite, 72, 73, 70, 74, something around about there. So we have had blackouts in the past, and it wasn't very nice. And the 3-day week was pretty bad. So we had lots of no street lights and all sorts of things going on.
That's quite bad. It doesn't sound really glamorous outlook in the future. And now gold is bumping or massaging 1712. Let's quickly have a look on TradingView. There's nothing else really, just a previous low. It is, let's have a look, Lepel's key levels. That was today's low, pre-market low. If it breaks through this price level right here, then we have a good chance the price is going to melt down all the way to 1700, which would give us from the second entry a beautiful 170 pips. Place your bets. Is it going to break through today's low, the pre-market low, or not?
Oh yes. No.
Oh, Alan, you got a comment on YouTube. Do you want me to read it out?
These are not on YouTube.
So B says, miss you, Alan.
Oh well, miss B too. I like B.
Everyone likes B. She's a gem.
Beep beep.
And of course, the lovely Sophie and Michelle.
We have the nicest girls in our group.
And good traders also.
And of course, the lovely Raoul.
I'm not a girl.
No, I know you're
Alan.
not.
Okay,
Well-
I don't know, to be clear.
Depends on the, which side you choose. So you can discuss it before the action. That who's going to be the the male, the alpha, the dominator. And now we're really massaging 1712, ladies and gentlemen. Make or break. What do you think about the second positions we entered during the live trading session? That was pretty almost no drawdown. So if I look at... Okay, so it's a minuscule drawdown compared to the massive profit that we're swimming in of 63 pips, ladies and gentlemen. And the first position earlier from this morning is now well over 119 pips, 100 pips, let's put it this way. Cumulative P&L for the day is about 140, 150 pips just on 2 trades. And where is the end? I question.
Finish him.
Thomas, I'd really like to know what you do on your time off. Because when you come back with such fire, accumulate so many pips, it's unbelievable.
You don't want to know what I'm doing.
You don't want to know.
Yeah, I saw the hand
Well,
gestures.
that's
so
a
you can add
topic
that.
for a private discussion.
He was making special soup with those mushrooms.
Yeah, that's the one.
Yeah, maybe the mushrooms, who knows? Oh,
Why go to the forest? You can buy them in Amsterdam.
nah, it's not the magic mushrooms. It's we went to mushroom picking in the forest today.
What are the
and I'm going-
cantarell?
Pardon?
The cantarell
The
mushroom.
fox, we call it fox mushrooms.
Fox mushroom.
Yeah, and I'm going to make a nice roasted mushroom bruschetta with some thyme and olive oil on a roasted chia butter bread.
Nice.
Gold is
It
really
respect-
struggling.
But it's also respecting the, what is it? The weekly R3. It's, yeah.
Oh, there's another pivot there.
Yeah. And what's the 30 and line
Indeed,
up
it's
with the
R3.
38.2 from the Fibonacci also.
Actually, therefore I mentioned this level. But it seems it will break it.
Looks like. I mean, it's keep hammering that level. There are some impulse moves like bam, bam. It's trying to bash it through, penetrate it through.
Maybe we will see the reverse from 1709.
Don't say that.
Okay, yeah, but at least there is like more than 100 pips. Thomas.
Yeah, it's happy days. I mean, even if you just catch, some I know some trading strategies with which gives you like 10 pips a day, and that's it, 10-20 pips, which it can be reasonable, can be very good return if you placing heavy lots with tight stop loss, 1 or 2 trades a day. So with this 150 pips already, I can't complain. Really quiet session today.
Thomas, could you please take a look at the daily or the weekly double top formation in gold? Last week there is a break of that, and currently it's retesting that level now.
Yep. Just reading the news on Bloomberg that the current bear market is among the worst since 1929. Today's bear market is consistent with previous stock slumps that have coincided with the recession. But curiously, the demand for crash insurance has been failing, meaning that the credit default swaps, for example. So less people taking the derivative of credit default swap, not rising as you would expect. It seems that the market is anticipating that lower prices get, the less chance they have going even lower. In other words, the Fed put is getting closer. Interesting. And now, jumping back to Vamshidar's request of checking the daily of what do we have to see here, sir?
The double top formation and the break of the support after
Like
the
that.
formation of double top.
So this double top?
Zoom out further. No. Zoom out further. Or it's much easier to watch on weekly.
Weekly?
Yeah, so zoom out. No, not this. Still to the left. Yeah, still. Double top, overall double top.
Double top where?
Still to the left. Yeah. Could you see the April or May? No, March 2021 level?
Which one?
The March 2021 support. March 2021, somewhere around. Yeah, to the left.
This?
Yeah. Yeah, to the left. That. Yeah, just below that.
And the other one?
Yeah, this is the body support. So you see the double top, and
I'm not sure, but maybe you want to mention that the support becomes a resistance.
Yes.
Yeah, I like it. Absolutely, it could be.
So, yeah,
We still sit in the. Oh, sorry.
If that double top works out, then we should see way lower.
Yeah, I like the idea, Vamshidar. If we go way lower, I like low prices when I'm in a sell.
We still sit in the channel on the weekly of the daily also. That's still respecting. So at the top, or we break it, or we go down.
Sorry guys, I can't see the screen. We're talking about gold or something else?
Yeah, gold. Yeah. You not see the screen?
I'm driving.
Ah, yeah.
Oh, for fuck's sake.
Oh, just listening. Don't worry, I'm not watching.
Freeman is asking how much costs the Bloomberg. It's priceless for capital market traders. For spot traders, is not that. Doesn't add that much added value. I'm not. I think I can mention it, but the minimum subscription fee is $2,300 per month. And then you have to add a lot of things because they have subscriptions. You have to pay for real-time data for the exchanges, which is another extra $100 or $200, and then you have to pay for many other things if you want to get the full capability of Bloomberg. So the clean one, the basic one, is $2,300. So I moved my stop losses into break even because gold doesn't want to go down that much. Keep trying, but there's a chance it's gonna come higher. So I'm gonna keep it safe. I logged in most of the profits. Move the higher stop losses into profit. So I'm going to leave some runners and just take it easy. Tomorrow's an FB. We already doubled our money today. those of you who wish to join the Alpha community, I'm just posting a link for, if I can move my mouse to my laptop. Yay. Click the link if you wish to receive daily macroeconomic analysis, fundamentals, technicals, and a happy meal.
Boss.
Yes, boss.
Christian!
Hello.
No
Do
way.
you still trade UJ?
Pardon?
Do you still trade UJ?
No, because let's have a look on USD Japanese yen. What's happening with USD Japan? We had a huge success this year in the bull rally, but you know, since a long time now, price is moving sideways. So if you look at the market, we have tapped into the 24-year high, and since that, you know, we had a mini crash, and since the price is moving sideways, so I stopped trading.
Do you think it'll come up to 146?
No.
No?
Maybe, who knows. We discussed about the dynamics behind USD Japanese yen. So currently, the Japanese central bank intervened in the market because they deemed that that price level above 145, close to 146, is deemed to be too cheap for the yen. That was the intervention level. So Japanese central bank intervened. The question is, can they really defend the Japanese currency against the US dollar, which is dominating the market? And if you look at the interest rate differential between the two markets, USD interest rate is at 3.25%. Chris, do you know what's the interest rate in Japan?
Right now? No, I haven't been following it.
So it's negative 0.10. So it's below zero. It's negative. So if we have two countries, one of them has a 3.25% interest rate, that's the yield that gives you the minimum on bonds, the interbank market, and we have a country which doesn't give you any return, which one would you choose as an investor?
The one that gives you more return, of course.
Exactly. So if you choose to buy the US government bond, which is denominated in US dollar, if traders in Japan, Europe, Africa, Middle East, all over the world want to buy that nice juicy 3.25% yielding assets, they have to exchange the currency, the local currency, to US dollar. What effect will it have on the USD?
Say again?
It will be bullish. So it will have a almost artificial effect that it's going to push up the demand for the US dollar. But on the other hand, the monetary policy, because increasing interest rate is also decreasing the supply of money circulating in the economy. So on one hand, you have a massive demand for US-denominated government bonds. On the other hand, the central bank is reducing the money supply, which is like a double whammy. So it's a double effect that's going to push up dollar or DXY index. It's going to create demand for US dollar, and against the Japanese yen, it's going to push the currency rate or the exchange rate much higher. So that was my speculation on US Japanese yen. But in the meantime, we had the central bank intervention by Japan, which override every single plan. So now just waiting out for further directions.
Okay. That's why it's stuck.
Easy, isn't it?
Yeah. Easy. Because I'm stuck on that at 140. I think I sold UJ at 143 or 143.5. I thought the intervention would like longer. Japan is opening in next week, I think, for tourists and visitors, kind of thing. So I thought that the JPY would have like an increased demand when it opens to public.
Then you have a strategy to trade.
Eh?
Then you have a strategy to trade.
I just put a stop loss around 100 and 146 just in case.
That's a really wide stop loss.
Yeah, it's a very small lot anyway. It's around 200 pounds loss. Anyway, It's already there.
How you doing, Christian?
I'm good. I had a month off.
Wow, a
And
month
now-
off.
A month? Was it just a month? I think it was a month or two.
Quickly, let's have a look on US 30, Dirty 30, because we have 10 minutes until US Open.
It was making higher highs and higher lows, but it looks like it's stopped. So it's just
So, I want to highlight this article right here. US Treasury yield shock likely soon. There is a good chance that the Fed won't start easing rates next year, as the market expects setting up US Treasury yield shock, and soon. If inflation expectations remain above the target, it is logical to expect the Fed could leave rates high for longer and even raise them, but the market is priced for rates to peak in March. Inflation might not be vanquished quickly. And I won't read through because that was enough information. And if you can see the Federal Reserve dot plot, which I showed you, that of course the Fed is not going to stop reducing interest rate. They already said that they're going to increase all the way throughout 2022 and 23, which is, again, ladies and gentlemen, is super freaking bearish for gold and for stocks as well. Question is, how can we translate this into a viable trading strategy?
Buy the USD index dips.
We have 8 minutes until the US Open, New York Stock Exchange Open. So we need to start thinking about whether we go short on US 30. What do you think? Thea Samin is saying the Indian stock market is holding up very well compared to the world indices. Thought on this? Well done. Good job, India.
Yeah, India is one among the few countries where there's competition. And there's no expectation of it.
Tirasara Hapus. God, I know I have difficult name, but some guys have even longer names than I am, and even difficult to pronounce, so I'm gonna just call you Thai. Canada IV PMI is releasing in 35 minutes. Will this hit Canadian markets? Any idea? Possibly. I don't trade Canadian dollar, so I cannot comment on this. What I'm waiting is the New York Stock Exchange open.
Boss,
What's up, boss?
are you looking at the volume of the US 30 on the daily time frame? I just noticed right now that during the 2-day or 3 days rally 3 days ago, I think the volume is decreasing, so maybe it'll
Why is
continue
that?
to-
What do you think? I keep talking about this for days. It's called the
I
bear
wasn't
market
sure.
rally.
Oh yeah.
The bear market rally because, yeah, you know, all the short sellers are taking profit, and they, you know, running out of steam. But you're not listening to me, Christian.
Oh, I'm not around.
Oh, Christian.
I need a spank then.
You can get it from someone else.
He would like to have it from you, Thomas.
No spanky. Well, for $20 maybe.
Let me see. Can't wait for this to go down.
We have 4 minutes until the New York Stock Exchange is opening. 3 minutes. And I am, oh damn it, am I miss with the US 30 short? Possibly. I have a feeling that the US 30 is going to crash today. What's your opinion?
Formed a nice reversal pattern at today's high, but I'm not sure if that's going to be the high, the last high before the crash.
Strong pump is possible, said by Mohammed, but our Chris actually just mentioned that the volume is decreasing. So who's right?
I wish I am right because I have a sell.
We have 1 minute until New York Stock Exchange open. I'm going to close in again, halving the position on my gold trades, locking in more profit before NYSE open, which is about to open in 30 seconds. and NYSE is open. Let's see. I'm going to miss out on the short on US 30. But not jumping in just now. Waiting to price to come back this area right here. I will be looking for sells right here if it comes back. Gold is now coming back to retest the daily pivot. Oh, guys, it's really boring today. Finally some movement. Okay, that's getting exciting. Luckily we logged in profits. Let's see how the pivot is going to hold. What do you think, Raul?
I don't know. It's the US30 also on pivot level. There it touched. Two trades.
Indeed, indeed.
But I'm heading a sell from 13,360.
Sell on which?
30.
US 30.
Yeah, I also
I'm
sell
really
Euro, USD, and Australian dollar.
I'm tempted
USD
to sell.
US30 usually respects the pivots or not?
It looks like, but if you look at the candles on the 1 hour, it's all over the place. It's
But if you see this morning the R1 of daily pivot, how clean it respected 3 times.
That's good. I've never tried it on US30. That's why I have no previous experience.
I will be waiting for US 30 to come up a little bit higher. But it's so tempting to enter into a short.
Well, now it respected then. It's playing ping pong a little bit.
Yeah, usually the first 5 minutes is the case.
I'm gonna be looking for shorts later tonight before the market closes. I'm not yet. Or maybe earlier. Let's see. I'm happy with my gold short so far. It's interesting. Definitely going to looking for short on US stocks tonight. Let the market create that nice head and shoulder I'm waiting for on US 30. Come back to the sell zone, but tonight, before the market closes, I'm going to sell the shit out of US 30.
Can we say the same for S&P 500?
Yeah, it will follow.
Thank you very much.
Not yet entering into any short on US stocks.
No, wait for the alpha.
Patience.
There's a virtue many lack.
Indeed, my friend. And gold, you cheeky bugger. is edging higher. So we might have a chance the price is going to now come back to retest the sell zone. Or maybe not. Luckily, locked in all profits. And now slowly going to close down the positions on gold. That bullish movement is not something I want to wait. It's now above the pivot, so it's time to consider locking in some profits. It's way too close, so I think US market still, I think we made about 200 pips today, just on gold. So, ladies and gentlemen, I think I can call it a day. We made some profit, haven't we?
Yes, sure.
Okay, let's call it a day. I'm gonna have a quick walk, grab a glass of wine, and then for you guys I'm going to post the evening sell-off positions if I see anything on US 30 with entry, stop loss and take profit level. Okay, I will be back in a few hours for you guys. See you later.
Thank you very much. Enjoy your walk.
Bye. Enjoy your mushrooms.
Bye. Thank you, Thomas. Sorry for being late.
It's okay.
Thank you, Thomas.
See you later. And you guys on YouTube, we almost managed to push the number of likes close to 300, which would have been nice, but you failed to do so. So I'm gonna call it a day now. I'm gonna have a little bit of break, and then we'll be back with the team. It's only for private members for the Power Hour sell-off, because there is something called the Power Hour where we make about 200-400 pips daily. If you wish to join the Alpha FX community, there are 2 membership left on the website. Then I will be closing down the joining. So if you want to take, this is your 50% chance to join the Alpha community. There's only 2 membership left. Link in the description below. Go to alphafx.eu/purchase. Just posting it into the YouTube chat. So if you're interested, you can pay with crypto, you can pay with any currency. Make sure that you use the discount because it is yours, and take it up. It's only 50% discount for 2 memberships if you want to get daily analysis, macroeconomics. I'm a trained economist, by the way. I used to work on trading floor, so I know what I'm talking about. And read it up, check it out. I think every of my work is on YouTube. You can check it. Today we cashed 200 pips with the team. After this I will be closing the memberships, no more joining. So hopefully see you on the other side. But until that, this is the Alpha FX.
It's all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.